Okay, let's set the scene. The date is March 5th, 2026, and on this day, the global financial markets got absolutely rocked by a sudden, violent sell-off. It was one of those days where everything you thought you knew just gets thrown out the window in a matter of hours. So what in the world happened? This was the number that was flashing red on screens everywhere. The Dow Jones Industrial Average, down almost 800 points by the closing bell, after being down over 1,000 at one point. And look, this wasn't just some abstract number. It represented trillions in value just gone, wiped out as investors absolutely panicked and fled stocks in what we call a flight to quality. So that brings us to the big question, right? What just happened? Was this just a random freak-out moment, or was it the result of a perfect storm of things that had been brewing under the surface for weeks? To really get it, we've got to unravel the day's events, piece by chaotic piece. What we saw was this massive flight to quality. Now, in simple terms, that just means investors dumped anything they saw as risky, like stocks, especially tech stocks, and they ran for cover. They fled to things that seemed safer, like oil and the US dollar. But this wasn't just a random market move. It was a direct reaction to a geopolitical powder keg that was literally about to explode. The main cause, the actual spark that lit the fuse, was a dramatic and frankly a terrifying escalation in the conflict between the United States, Israel, and Iran. A conflict that had been simmering suddenly went global, and the markets felt that shockwave instantly. I mean, just look at the speed of this. It's breathtaking. In just a handful of hours, we went from targeted strikes to widespread retaliation, and then a political green light from Congress for a long, drawn-out war. And the final straw? The Strait of Hormuz, the world's oil superhighway, was paralyzed. That move threatened to choke off a fifth of the entire planet's oil supply. And if there was any lingering doubt about where this was all headed, this quote from President Donald Trump just erased it. This wasn't going to be some short surgical operation. For investors, this meant one thing: uncertainty. The cost of war, what analysts call the geopolitical risk premium, was here to stay. It was time to buckle up for a long conflict. And here is the immediate result. You can see it right here. Oil prices just exploded, hitting their highest levels in years. Now, this wasn't just about pain at the pump for you and me. It was about the fear that it would reignite inflation, just when it seemed like we finally had it under control. So the war was the spark, for sure, but the market was already like a pile of dry tinder just waiting for a match. It was incredibly vulnerable because the US economy itself was already on edge, caught in this really confusing and tense situation that left investors with basically no room for error. And here was the problem. The economy was sending two completely different messages at the same time. On one hand, you had these incredible job numbers, the strongest in almost a year, and the services sector was absolutely booming. But on the other hand, inflation was being stubborn, sticky, and the Federal Reserve was totally committed to its policy of keeping interest rates high. Okay, so this higher for longer policy is absolutely crucial to understand. The strong economic news was ironically bad news for the stock market. Why? Well, because it meant the Fed had zero reason to cut interest rates, and those potential rate cuts were seen as this key safety net for the market. Without that safety net, the market was basically standing on a trapdoor. So, with war breaking out and interest rates stuck in the mud, the day's chaos created a really clear divide in the market. There were some very obvious winners and some even more obvious losers. And this table really lays it out. It was a classic rotation. Money poured out of sectors that are sensitive to a slowing economy and high interest rates, think banks and shipmakers, and it flowed directly into sectors that actually benefit from conflict, like energy and defense. Pretty straightforward. And here's a little detail that I think tells you everything about the psychology of the day. Even fantastic news couldn't save some companies. Take the chipmaker Marvell. They reported record earnings, gave amazing guidance about future AI demand. On any other day, that stock would have soared, but not on March 5th. This analyst quote just captures the mood perfectly. Earnings didn't matter. They were a secondary driver. The big picture story, the macro story of war and inflation, was the only thing anyone cared about. Good news was ignored, and any bad news was punished, and punished hard. So after a gut-wrenching day like that, the big question is always, well, where do we go from here? Was this just a one-day shock, or is this the start of something much bigger? Investors are now watching a few key signals very, very closely. To figure out what happens next, everyone is pretty much laser-focused on these four things. The official jobs and inflation numbers will tell us if the economy is starting to crack under the pressure. Any change in tone from the Fed will be huge. But really, above all else, the market is hanging on every scrap of news about de-escalation between the US and Iran. And that leaves us with the final big question. Was March 5th, 2026 just a temporary panic, a blip on the radar screen, or did it mark a fundamental regime change? A moment where the tectonic plates of geopolitics and economics actually shifted, creating a new and much more dangerous landscape for all of us. Only time is going to tell.